Hello. Wait for people to say. Hi, George.
Morning.
Hey, nice to see you. How you doing?
Good to see you again.
Antonio. Okay. I'll just kick this off. I kind of like to start sharp, I mean, your time is important. And the story I'm going to talk about today is really quite unbelievable. But I would like to believe that, if you've been with my service for a little while, that I've hopefully gained your trust of what I'm about to tell you, that is actually how it transpired. So over the weekend, I like to think about what I'm going to talk about, and I often find it quite challenging to come up with something that's interesting, but at the same time provide something that's insightful. Um, I think about this a lot, and Tomas gave me some good pointers. He said, when you say something, try and make it something about the portfolio so that people can kind of contextualize it slightly better. And okay, I'm kind of thinking about, because ultimately what we're trying to do is like buy low and sell high. It's not more complicated than that. And I'm thinking, like, what can I say here? So over the weekend, I'm struggling. And I get into my mojo on Monday morning. Obviously, my morning is the UK, so it's like it's way before the US market opens. And I kind of start writing, and I want to talk about, in my mind, I'm thinking about, okay, how do I explain to people to just have a tiny, tiny bit more patience in investing, because everybody wants to react so quickly. So I kind of, I'm going to try and share my screen with, let's see, with what success I managed to do that. I'm going to try and share my screen. Okay, hopefully this works. No, that doesn't work. Okay, can you see the share price here of the stock?
I do, yes.
Yeah, cool, man, cool. So the stock I was going to talk about was HIMS, and I wrote this on Monday before the market opened, and a few weeks before the HIMS reported their results, there was a lot of news.
Can we see if iPhone 6 can mute themselves? They keep interjecting.
Yeah, sorry.
I think it's iPhone 6.
Yeah, iPhone 6.
Sorry, I'm so sorry. One day I'm actually going to be able to kind of get around to this. So there was a lot of news flow heading into the earnings results for HIMS about the CEO made certain comments, and these comments aggravated a certain group of people because he had made, I think this is kind of open now, everyone knows about this, he had made pro-Palestinian comments, and people were like, oh my God, like how can he, and like it's like how dare he, and this was like kind of weighing on the stock, and people, I kid you not, wrote to me and said, oh, how can you sell me this dog? And I'm not talking about one person, I'm not talking about two people. They were like, oh my God, it's like such a complete dog. And I'm like, don't worry about that. That has nothing to do with anything. And that's like the little red arrow that I tried to put on my screen here for like, as we kind of going into the earnings results. And the earnings were, like, I felt really, really good. To be honest, I've been recommending HIMS for a while, so I kind of feel like they're quite good at what they do. So I wasn't particularly surprised that their results were amazing. But obviously, listen, I've been doing this for a while, and trust me, it's much better to have a good result than a bad result. And the stock kind of came up a little bit, and then like a few days later, it was like, yeah, forget about it. Everyone's like jumping on the bandwagon about the CEO's comments. Incidentally, I should note that people are saying this. Now, I've not verified this. I don't waste my time on this, but people have been saying that the CEO's wife was Jewish. So I was like, oh my gosh, that's kind of an interesting turn of events. But this was all kind of happening, and the share price was just collapsing. And and my point of all this is that the market kind of latches onto a narrative, and after a while, they kind of get bored. Things kind of people just move on. Like they go and look at GameStop or something like that, and life goes on. And the share price will kind of more or less follow what the future free cash flow will be of this business. And as I said, like for people that didn't catch at the start, when I wrote this, it was way before the market opened on Monday. And you can see this, I wrote this, like the share price is kind of like, you can see here on the right-hand side is still below like the recent highs. And then I wrote this and the stock just sizzled up. It was up 30% on Monday, yesterday. And that kind of hit my price target. And, the thing about being the style of investor that I am is somebody that's just perpetually out of favor. And I kind of, when I recommend something, it's like, it doesn't feel right. And I get it, I can see the other side of the argument as well. And when I decide to kind of call it a day, again, it doesn't feel right. Like, oh my God, the potential here is like, this is like the next NVIDIA. It's like, yeah, but I've seen this movie and I know how this movie goes. And I think it's much better to, be a bit more reasonable. And it's not that it's not to be absolutely clear. It's not that I believe that it's much better to kind of seize a small profit and let your losses go, but it's not that at all. But I also have to think about the context here, right? So a lot of the problems with these kind of healthcare providers is that they don't really have much of a moat. And I recognize this. I recognize this with LifeMD. I recognize that's the play, right? You make your investment. You kind of sit on your hands, and sometimes you kind of sit on your hands and you wait a whole year, and just kind of nothing happens. Sometimes you get lucky, and it's much better to be lucky than it is to be smart. And if the money is coming my way, I'm like, okay, fair enough. I'll wait for this kind of things to peter out and slow down, and everyone kind of start putting little rocket science on a FinTwit. And like in a couple of weeks, I'll just kind of say, okay, let's just call it a day here. And that's the thing, you have to be so damn brutal with investing because you don't know how stories unfold. And stories have this ability to become part of the collective, and every so often the old narrative resurfaces, and you don't know that. And when that old narrative resurfaces, you don't really know if it's going to last a week, a month, 6 months, and you don't want to round trip your investments because that's like one of the kind of most challenging things. You need to be very, very brutal with your strategy, not to round trip. By that, I mean, like you kind of hold it and it goes up, and then like 3 months later, it's back to where you got it, and you wasted time, and obviously you didn't get your money. Because that's really what you're trying to do. You're trying to always combine these two aspects of time and money. And I just, I recognize that it's not fully priced, Hims. And I feel like, there's still some juice left on this. But at the same time, I've been banging on this for a little while now. And I feel like, okay, most of the people that have been in my service for a little while are probably will have some money on the table here. And this kind of brings me to, I'll stop sharing my screen because that's about that for a second. And that brings me to my kind of second aspect that I want to talk about is that a lot of people in my service, even if you've been with me since before 2024, they will struggle to I say to everyone, I will deliver for you 15%. I will deliver in 1 year 15%. And somebody wrote to me and said, oh, I've only made 16%. You said that you were going to make me a lot of money. And I was like, okay, I mean, like, you know, how many months have you been here? I've been like about 2 months. I was like, okay, you know, like that's kind of okay, you know. And a lot of people won't get even that 15%, like for my stocks, because they don't follow the process. And I say, listen, buy at the start when I recommend it. I am taking on that responsibility of recommending something to you. Don't buy it at the end when I'm saying, okay, I kind of feel like this is kind of petering out. Another one that came up was, oh, I like your stocks, but I like to put options on it. I'm like, well, that's not my strategy. You know, it's like you coming up and making a lasagna and putting everything in a blender. Oh, I got the ingredients right. Yeah, but you just kind of did your own thing with it. It's like, I try, you know, I try to be very transparent and honest with you. This is really, really difficult. And there are good periods in investing and there are bad periods. Obviously, now is a good period. Everyone is singing and dancing. And it's just like, and I know that can turn really quickly and everyone will just be like miserable. I know that. But I try to make the strategy as simple as possible to get people thinking about what's the sentiment on that business. That's really what I'm trying to kind of get people to think about, because what's the right valuation of something is so relative. You know, the Fed says this, Elon Musk says that changes interest rates this way. And I'm just trying to get people to think about what's the sentiment relative to the underlying market. That's what I'm really trying to get people to think about. And you know, of course, man, I make mistakes. Like I make mistakes as well. But I feel like the real game here is not to put too much emotion into any position. I always say just equally weight, like pick 5 of my stocks, equally weight them. That's it. And you don't need to do a lot of the stuff that I say or do whatever. But do try within reason to follow the setup. The setup is like kind of buy when I'm kind of saying, okay, this is a new idea, kind of, you know, let's see how it goes. And like once the thing has been around for like 7-8 months, maybe that's not the right time to start buying something in the that I say, okay, because I'm already thinking about the exit, because you have to be really brutal. I kind of made up this quote. You know, when the returns show up, you got to take your returns and go. Otherwise, the market will take your returns and go, because it's brutal. And I feel like there's some core principles here, but ultimately, the most important aspect of this whole investment strategy is what could drive a change in perception. I've tried to simplify this to look at the change in free cash flow, but that's just like something that we can quantify and track. But I'm trying my best to make you think about the change in perception on underlying stocks. So anyway, that was about HIMS. Kind of waffle on a little bit too much there. I still got a couple of minutes. Let me just see what else I kind of had in my notes for today. So I like this quote from Buffett, and I'm going to repeat it. And I'm not the kind of person that comes up here and just, oh, Buffett said this, therefore I'm going to say this, and therefore everything I say is being sanctified. That's just, you know, nonsense. But I like this one, and I'm not the best reader. My daughter will always say that, God, it's like this reading is awful, but just a paragraph. I'm not going to bore you to death. Without fail, Mr. Market appears daily and names a price at which you will either buy your interest in your stocks or sell you his. So in that, it's essentially saying that every day there are share prices, and the share price is not there for you to react. And a lot of people kind of get over emotional. The share price is down. Oh, someone said to me, oh, I lost all my money on LifeMD. I'm like, whoa, what? I'm like, yeah, the share price come down. I'm like, well, calm down. Like, you know, like we're just starting here. And it's like, oh, well, you know, I bought it and it's gone down. Like, okay, well, just, give it a little bit of time. So you don't have to always react to something when it goes down or up, okay? It's perfectly okay to say, you know what, I'm cool. Just go with the flow. And that's okay as well. Yeah, I hope that's kind of something that I feel that has taken me a long time to learn. And it might resonate with you or it might not. I don't really know. But this was something that took me a long time to learn. And I feel that once this kind of bell went off, I kind of understood a lot more about investing. And it kind of removed a lot of my, let's say, fear of missing out or being inactive. Oh my God, what shall I do? That removed a lot of that process of having to react. Okay, so, and this is my final thing that I've been kind of going on about it for a few weeks now. The sad reality of investing is that the real outperformance of an investor doesn't come in these periods that we're in right now, this bull market. Because in the bull market, there are no brains. Everything is going up. Everyone's a hero. The problem is that we all feel like we deserve a certain amount of return from the market, okay? We have a dream, have a goal, have an aspiration that we deserve. But the challenge becomes that the real outperformance comes when the market slows down. And that is the time that you have to remain engaged. And that is really the time where having a bit of focus and sticking to the process pays off. And by that, I mean, we have a list of stocks that we're kind of interested in. And if we feel like something in our portfolio, okay, I'll give you a practical example. I don't know if you've been around for a couple of months, you know this. Celestica was a stock that I was recommending in January. And I was like, okay, I put a price tag at about $45. And it kind of shot to that. And I felt, okay, if I reach my price tag in 3 months rather than the 12, it's okay to park some cash on the side. Maybe something else interesting shows up next month or the month after. And, if it reaches a reasonable valuation, don't overstay your welcome. It's an echo of what I said before, but anyway, I just wanted to share that. And I'll kind of open it up to some questions if anyone has any. I would love to kind of hear what your thoughts are, if you don't mind sharing them.
I just wanted to say I really like your take on the narrative of the market, and I think one of the problem is that everything is so transparent these days, that we have so many opinions at the same time. And it used to be so easy for me to just follow a few people. And now I just feel I'm bombarded with daily opinions on something. And so I kind of stick with you.
Okay, fine, thank you.
And I follow you, and I believe your attitude of trying not to be too emotional and not to over-evaluate daily emotions that the market produces. So thank you for that.
Thank you so much, Natalie. Natalia.
Natalia, yeah.
Where are you from?
Berlin, Germany.
Oh, I love Berlin. Oh my God, love Berlin.
Yeah, I see your T-shirt.
Yeah. Good. Thank you. Thank you. Yeah. Thank you. Ampelman. Yeah.
Ampelman. Yeah.
Yeah. I also wore it last week. My daughter says she doesn't really like it. I was like, no, but this is a cultural reference. I mean, you're a child of Europe. I love Europe. I love Europe. Europe is like the best. And she's like, yeah, but I don't get it. And I'm like, yeah, but like you don't love Europe like I love Europe. Anyway, sorry. So there are a lot of different voices. There's no doubt about that. And it's, I'm going to be honest with you, right? So, and this is doing a disservice to me. And I probably shouldn't say this, but I'll say whatever. I don't care, man. Ultimately, Natalia, you're on your own journey. That's the truth of the matter. And I can try as best as I can to guide you. But I know that when I've listened to other people, I get punched in the face and punched in the face. And they have this ability, somehow, I don't know how it happens. They have this ability to kick me in the face when I'm already down. And so I have said, to hell with everything. I have just completely, okay, I like reading Buffett just because, but manga and then Buffett, manga and then Buffett. I like to read, like, because I'm passionate about investing, but there are a lot of voices in the market, and there's no doubt about that. And I don't want to say, like, listen to only me, because I don't know everything. I don't know everything. But what I will say is, if you pick, let's say, 5 of my stocks, follow my advice on those 5 stocks. Like, if someone else then says something like, they haven't maybe done the work, so they can just be like shooting from the hip or whatever. Obviously, I would say that, but it is difficult because, man, there's so many voices out there, particularly when the market is working in a certain direction. So when the market is moving in a certain direction, for the sake of our discussion, when it was COVID and it was like the work from home, and there was certain groups that were talking about this SaaS 2.0. I don't know if you kind of were following it then, but basically that SaaS was a new paradigm. I just find it so funny looking back now. Anyway, and it was working, the thesis was working, and everything was going to the moon, and everyone was hopping and singing and dancing. And I was persuaded by the siren just kept on going on. So I've been through that cycle, and I'm like, to hell, I'll just focus on my process. Now, I must say, as I said before many times, I make a lot of mistakes, but I work extremely hard to refine this process. I work really, really hard, and I take this very, very seriously. And when I've made a mistake, I've been like so transparent. I say, hey, listen, I'm not 100% sure with GitLab, and I'm not sure if the lady is here, Anna from last week, whatever. And she was like, okay, GitLab is doing this, and I was like, okay, maybe not, I don't know, but let's just kind of calm it. Let's see how it goes, like in like 2 quarters. Let's see. And this is stuff that I was originally recommending, and it fell on me, fell on her. And I'm saying, okay, let's just see. Let's not have to always react to the share price. So again, it is complicated investing, and there are a lot of different voices. But when you pick certain of my stocks, I'll say like write me a message, like just hit me up, say, Michael, listen, so and so has said this. What do you think about that? I'm very transparent. I'll say straight away, that's a valid argument, but have you thought about this? Like, yeah, that's what I'll say. Okay, I kind of waffled on it. Thank you. Hi, George.
Hi. Question for you. A while back, you mentioned that you thought the market was getting a little frothy, and it was just late last week that someone on CNBC, the business channel, and I think it was an expert in BlackRock, and said actually the numbers are all good, economy and this and that. So it's still going on. There's reason to expect the market to continue. But you've mentioned about frothy, and he mentioned that. Where are you at now on that?
Oh, it's definitely frothy. It's complete madness, in my opinion. It's insane. It's really what it is. I mean, look at GameStop last week or the week after. I can't remember. Everything just merges in my life. Nah, come on. This is complete bananas. I don't have any other more technical expression than that. I am trying my best to navigate the portfolio. I'm always very, very mindful of the valuation of stuff that I'm pitching. I'm very, very acutely aware of that. I pitched Sizzle today. I was like, okay, like 9 times the earnings, man, like clean gap earnings. I'm cool with that. That's cool for me. But yeah, I think, like, man, look at the S&P in the last like 2 years or something. It's been like growing like 15%, if not more. Like even like, it's just mad. it can't keep up. It cannot keep up at this pace. Something's got to give at some point. I don't know. So I do think it's frothy, but, and this is very important, George, I don't try and time the market, okay? I try to the best of my ability to pick out businesses that I believe have some potential to inflect higher in the next 12 months. But I'm not playing, oh, where will the market be at the end of the year? That's a really tough game. That's not what I'm trying to do. You know, markets can continue going higher and higher and higher. Look back to a lot of people saying in 1996, the market is really overpriced. 1996, 1997, 1998, 1999. Man, 4 years is a long time. If you remember how it went from 2021 to 2022, those 2 years when everything was red, that felt like a really long time. Like everything was just bloody red. So imagine 4 years of people thinking it's overpriced and it continuing. So it's difficult, right? Like timing the market is really, really difficult. Incidentally, I will just mention, just for 1 second, that George has been pitching me on Zims. This stock has, I know today's results were like a bit kind of sideways, but he's been pitching me on Zim like a madman. And this stock has been like a rocket. Like I didn't need to do anything else. I would have just bought this stock. I would have saved myself. It outperformed everything in my portfolio, like without doubt. The day he recommended it to me.
Thank you, Michael. Yeah, I told you it was 11. It hit 19. It's down around 17, and it still has a lot ways to go. Everyone. It's as long as the Red Sea stays unusable for container ships, there's spot market on the containers. Go Zim, and thank you, Mike.
Does anyone else have any other questions they want to share? Okay, if no one else, just second round. Does anyone else have any questions? Okay.
Michael, I keep thinking about your process that you were thinking about when you're saying you don't want to invest in something and wait till it comes back down. But like when you're at the point at which you hit your target, do you reevaluate and say like, oh, is it going to keep going higher? Or do you feel like if the probability of it not going higher is not much, is that when you say, okay, we got to get out? Or what is your process at that point?
Yeah. So like 2 recent examples, I have revised up Moneyline. I lost count here. I've revised up Giga Cloud Technology. Like it needs to make absolute sense to underwrite that investment for another year. It needs to be like crystal clear. Because look here, let me give you a very good example, Daniel. I've been very bullish on Giga Cloud. I know now it's like a meme stock and everyone's bullish now, but I don't care about anyone else. I care about me in investing. And when I looked at it the first time, seriously, to kind of recommend to people, I felt, okay, this could do okay. With the passage of a couple of quarters, I think actually this could do really, really well. So I've upwards revised it. Now, since the latest quarter was reported, the share price is actually down. But I'm not nervous because I thought myself, there's always a potential that it can come down again. I'm not going to get anxious about it. So every time that I go through that earnings result, I have to think, am I seriously willing to underwrite it for another 1 year? And when I have my doubts, like with Uplovin, I said, okay, you know what? Let's just see how it goes. I'm not going to be underwriting it any further. Let's just cool our horses. You have to always be thinking about that because the market doesn't care what price you paid. That doesn't matter. What the price was last week doesn't matter. Nobody cares about that. You need to be thinking, where is this going? And the market is a lot smarter than you as an individual. And the market is more often than not right. So you need to think. You need to be independent in your thought process, but you need to think, if this comes back down, am I going to be overly comfortable to wait another 6 months for it to come back up again? For example, an example of Giga Cloud Technologies, I'm comfortable, I'm cool, that's cool. With case of Uplovin, I'm like, you know what, maybe I'm not so cool. So, you got to be thinking about that because as I said, I'm very conscientious that when the market goes sour, it can be going sour for like 6 months in a row, and it feels brutal. And then you feel like an idiot, and you're like full of regret. And the biggest problem of all is that when the market goes sour and you're feeling bad about yourself, you're not able to move quickly when things do start to stabilize. And that's the problem, because people, so some guy wrote to me today, it's like, this was about a month ago, and he's like, oh, the market's going down, I'm going to come back in November. I'm like, okay, I didn't get that email. And just, you know, when markets go for a couple of days of things going sour, extrapolate that forward for 6 months, it can feel really brutal. So you need to be very much understanding of, you know, am I really seriously able to underwrite that? So my preference, and I'm clear when this isn't the case, so my preference is for these businesses to have very strong balance sheets. I really like, this well-capitalized balance sheet is like my cornerstone. You know, it needs to be there, because when it's not, you know, for example, with AppLovin, I'm like, okay, I'm thinking about that, okay? And this, I'll give you another example. Obviously, this is stock that did work, but I don't own it anymore, so it doesn't really matter. When I was with Broadcom, I was recommending that stock, and I was like, okay, it has a very squeaky clean balance sheet, and it's making a lot of free cash flow. So I got some wiggle room. I didn't know at the time that they were going to buy, make a large acquisition of VMwares or VMwares. I didn't know, but I had that flexibility. So you need to think a lot about what's going to happen going forward in terms of, is the business well capitalized, and am I going to feel really bad when I see that share price coming back down, or I'm going to be comfortable? That's what you and I spoke last week about Sezzle, and I was like, okay, I know that this business can come down. I know that. I know that like the share price came up a lot, and I know it can come down again, but I'm not going to be comfortable when I see this thing coming back down. That's what I'm thinking about, right? That is really, you know, what this is all about. You being comfortable with your portfolio. Yeah, sorry, kind of waffled
No,
on a
that's
little
super
bit.
helpful. Yeah. Yeah. And then that makes a lot of sense for where you're like, that underwriting process is like key for like thinking that next 6 to 9 months and then plus. Yeah. Okay.
Because I find there are two types of investors. It seems to be the investors that I seem to talk to mostly are very short term. You know, everyone's like, jumping from this to jump to the other. And I also know some kind of professionals that do this kind of, you know, some money behind them, and they're like really like long term. And it's difficult to predict the long term as well. So I'm like, I like this middle ground, because, you know, you can always underwrite it next year for another 1 year. You can always do that. But to try and forecast where something's going to be 3 years out, it's more tricky, you know, it's more tricky. A lot of things happen in that period of time. If you're buying, let's say, a business that is a very boring business that has been around for, you know, like 50, 60 years, you know, most likely it will be around for a while. Now, if you're buying one of these kind of tech businesses that's been around for, let's say, 5 or 10 years, hey, maybe it's not going to be around the next 5 or 10 years. You know, that theory that you kind of have to stand the test of time to really stay with the test of time, you know, kind of. Yeah.
Thanks for the feedback. Yeah.
Okay. Any more questions, or are we done for today?
You're doing a great job. Keep it up, Michael.
Thank you so much,
Yeah, thanks,
guys.
Michael.
Thank you for the turnout. See you next week. See you. Thank you. Bye-bye.